Hi, Facebook Live. My name is Tade and I'm an enrolled agent with the IRS, and I'm also the Member Experience Manager for Stride's tax product, Stride Tax. And I'm really excited for y'all to be joining us today while we go over some of the most common questions that I get around this time of year about being prepared to file your taxes. So we're going to wait just a few minutes before a few more people join the broadcast before we get started. Thank you for your patience. Okay, all right, we'll go ahead and get started. So one of the top questions that I tend to get around this time of year, as the filing deadline is approaching on April 15th, are people asking me, I wasn't tracking my expenses in 2018, what do I do? Can I still deduct all of my business expenses on my tax return if I haven't been tracking this past year? And if that's the case for you, then don't panic. The answer is yes, there are a couple of things that you can do to make sure that you can still claim all the deductions that you're owed. So before we get started with how to do that, I would love for everybody to go ahead and like this broadcast and share it with all of your self-employed friends in your industry so that they can watch it and hopefully be prepared for this filing season. And if you encounter any questions while we go through this information, feel free to comment directly on the broadcast and we'll get to your questions afterwards. So deducting your business expenses is so important because it can literally put money right back into your pocket. Deductions will lower your taxable income, which means you're paying taxes on a smaller amount of income, which means you pay less in taxes. So I'll go through how that works. So when you're self-employed and you're reporting all of your kinds of income on your tax return, you're reporting maybe your W-2 income, maybe any other investment income that you got. And when you get to reporting your self-employment income, you're only reporting your self-employment profit. So not just all of the sources of business income that you got throughout the year, you're reporting your profit, which is your business income minus your business deductions. So instead of reporting just the one big number of all the business income that you got, you're reporting hopefully a smaller number that incorporates your deductions. So what that does is it makes your business profit that you're reporting on your tax return much smaller, which means your taxable income is going to end up being smaller as well. And when your taxable income is smaller, then you're going to pay a less amount in taxes because you're being taxed on a smaller amount of income. So what that means is the more deductions that you include in your tax return, the less you're going to pay in taxes. So the more business expenses you include on your tax return, the less you're going to pay on your business profit. So it's really important to make sure that you're incorporating every deduction that you're entitled to so that you can keep lowering your business profit further and further. So what that means is that you need to make sure that you are familiar with what you can deduct, and you need to make sure that you're tracking all of this information. So to make sure that you're deducting everything that you can, it's really important to know what is deductible for your industry. So some really common expenses that I see from Stride members include everything from mileage to your home office deduction to vehicle expenses, cell phone bill expenses, supplies and equipment, really anything in your industry that you would consider both ordinary for your industry and necessary to get the job done. So I'm sure that all sounds great, but I'm sure you want to know what to do if you haven't been tracking those business expenses throughout the year. So again, don't panic. A lot of people are in the same boat as you, and there are a couple things that you can do to make sure that you're reporting your deductions responsibly. So I have a couple of steps that I would love for everybody to take. So one, I would familiarize yourself with the common deductions in your industry. So it's going to be different for every industry. What is considered ordinary and necessary in one industry might not be ordinary and necessary in another industry. So for example, if you're a rideshare driver, you're probably incurring expenses like maybe your aux cords or phone chargers or passenger goodies that you're giving out to your riders. Those things would be considered ordinary for the rideshare industry and probably necessary to do the job really well. But on the flip side, if you're maybe a real estate agent, maybe you're spending money on lock boxes or advertising or mileage driving clients from one house to another. What is considered ordinary in that industry is probably really different from what is considered ordinary for a rideshare driver. So the step I would have everybody do first is just make sure that you're familiar with what is considered deductible in your industry. Stride has a ton of blog posts that can help you go through this. So we have blog posts about deductions for specifically real estate agents or pet sitters and walkers or delivery drivers or rideshare drivers. If you go to our blog, then you can read all about the different kinds of expenses in every industry. So the next step would be to track down all of the expenses that you weren't tracking throughout the year. So this does take a lot of homework to do. It is going to take some time to make sure that you can find all of the expenses that you had that you weren't maybe tracking as you went, but it's definitely possible. So the three places that I would look first are, one, look through your all kinds of records about any money that you were spending throughout the year. So it could be your bank statements, it could be your credit card records, it could be your calendar, pretty much any record that you have, either online or otherwise, of where you were spending money throughout the year. And I would definitely pay attention specifically to checking over your work calendar. I think half the battle of remembering what you spent on your business is just remembering where you were on what day. So if you know that you are working a few specific days per week, then maybe you can use your work calendar to go back through your bank statements and your credit card records to remember which of those purchases might have been for work. Secondly, I would make sure not to forget any expenses that may have been captured online only. So most phone records or utilities or health insurance bills are probably only captured online. So make sure that you go through all of your online accounts that may be tracking all of your expenses that could be related to your business. And third, if you forgot to track your business mileage throughout the year, then it's okay. There are also a ton of ways to figure out where you were driving for work and when. Once again, I would still reference your calendar to see maybe where you were driving to clients or site visits or work-related errands or anything like that. And especially if you were a rideshare driver or delivery driver, if you look on any on-demand apps that you may have been using throughout the year, like Uber, Lyft, DoorDash, Postmates, looking through your driving and delivery records could help you remember what days you were driving and maybe how far you were driving. A lot of those records include starting and ending locations, so it could be pretty quick to figure out exactly how many miles you were driving for work that day. That was a lot of information that I just threw at everybody, so if you have questions about what we just went over, feel free to comment on this broadcast, and we'll make sure to get to your question after we finish. So thank you everybody for joining us today. I hope everybody feels confident and set to handle this coming tax season. Don't forget that the deadline is on April 15th, so please everybody make sure to get your tax returns in before that date if you can. And if you found this Facebook Live helpful, be sure to like it and then share with all of your self-employed friends in your industry, and maybe you can help each other be more prepared for this tax season. And if you haven't already liked Stride on Facebook, do so now so that you can get a notification the next time we go live about a tax topic that may be interesting to you. And if you're looking for any more tips or guidance or maybe a recording of this Facebook Live, you can follow us on Twitter at Stride Health, or you can go to our blog and read more detail about any of the topics that we went over. And please do leave your questions in the comment section.